Hey, Andrew here from the Investor's Way. Welcome to Woody's Weekly Wisdom, episode number 64. And today we're talking about this headline here, the major banks' huge move on rates. Now, before we dive into the article, do us a favour, if you're watching this on YouTube, hit the little bell to get notified when we release these videos and the subscribe button. And if you're watching on Facebook or LinkedIn, hit the buttons below to like, comment and share on this video so that we can spread the news and more people can get what we're doing here with these videos, where we look into a major story for the week or a story of the week of interest and how that might impact how you go about managing and growing your wealth. So the headline, major banks huge move on rates. And when we click into the article, as per normal, the headline has now changed to something different. And it says St. George Bank lowers fixed rates across a raft of home loans as inflation rate eases. So one of the main things I wanted to highlight today is, as normal, I always look around for different articles that I might be able to talk about on these calls. And it was interesting that I saw this particular article, and then there was another one that was talking about, basically another bank who was kind of warning everybody to just, take a deep breath when it comes to interest rates because, maybe, all things are not so rosy. So as per normal, there's lots and lots of conflicting information out there when it comes to what the different messages the banks want to send you. Now, the reason why I chose this one is because I think there's a little bit of a lesson in this article, and when it comes to understanding how banks operate, particularly when it comes to interest rates, this article gave me the best opportunity to demonstrate one of the things that happens when we're in this environment. And I've been talking a lot in the last week or two with people, clients and prospects who, in terms of interest rates, the power shift is happening. And what I mean by that is that for the last 18 months, as interest rates have been climbing so rapidly, the banks have had all the power. And the consumers, you and I, have not had much negotiating power in a rapidly rising interest rate environment. And now that we're starting to see rates and talk of rates decreasing, there's been a shift in that power because, as you can imagine, as rates start to fall, the pressure will be on the banks to pass on those rate reductions. And if you recall history when rates were coming down, where banks started to not pass on the full amount of those reductions. And if you recall the last 18 months, they have not been shy in passing on 100% of the increase in interest rates. But whenever the rates have gone down, whether it's 0.25% or 0.5% when that was happening, the banks would only pass on maybe 0.15 or 0.2 of that 0.25% reduction in rates. And what that led to was competition. And so as a consumer, you had the ability to go and negotiate with your bank to get the best deals that were available, and banks had to be competitive. Well, that shift is happening, and that's why I've chosen this article to make a point about what's going on with interest rates and something for you to be mindful and aware of when it comes to the next 12 months and what's going on with interest rates. So St. George Bank have announced a whole bunch of reductions in their fixed interest rates. So want everyone to be very, very mindful that we're talking about fixed interest rate only loans at the moment. And why would a bank be reducing fixed rates and not the variable rate? Well, that's the reason why I wanted to talk about this article today. So let's first talk about why this has happened, and the big news about interest rates as such, or why interest rates are dropping, is because we saw, and I'll just scroll down a little bit to this graph, where we saw the inflation rate drop from 3.8 to 3.5% this week. So that was a nice reduction. It's come with, as per normal in financial markets, it's come with a warning that maybe that reduction in inflation was because of the $300 energy rebate. Maybe it is, maybe it's not. But obviously from a high of 8.4% to 3.5, we're heading in the right direction. The trend line is definitely in the right direction, and we want to see that come down to a little lower so that the banks are a little bit more incentivized to start reducing rates, or the Reserve Bank is more incentivized to reduce rates. So, as I said, comes with a warning. There's the electricity rebates that may have contributed to the CPI rate or inflation rate dropping from 3.8 to 3.5 in June. But that's the good news. And that has led to St. George Bank. And I should point out that St. George weren't first. The Commonwealth Bank did a similar thing last week where they reduced some of their fixed rates as well. And here's what I really want to take from this article and these movements in both fixed rates with St. George and Commonwealth Bank. What that's telling us is the banks know that the variable rate will be falling soon. And what that means is they are trying to get ahead of the curve to encourage customers to lock in to their fixed rates now before these rates, the variable rates, start to drop much lower or lower than what they're setting these fixed rates. And it's important to understand that banks very rarely lose when it comes to their fixed rates. So if they're asking you to lock in now at these rates, where are they here? Up around here at 6.19 to 6.39, these types of fixed rates. If they're looking to get you locked into these rates, then that is an indication that the banks believe the variable rate will go below that level. And as a result, they're trying to encourage people to say, well, we're going to give you, a 0.75% drop on these 5-year fixed rate loans. Now would be a great time to take advantage of that, and you get certainty about your repayments at these levels. But what signal that's really sending to you is that the banks believe that over the next 5 years, rates will drop by more than 0.75%. And therefore, they want to get you locked in now so that when they do drop below that, they're getting more interest payments from you than they would if you stuck to their variable rate. Now, that's not necessarily giving you any advice about hanging on to your variable rate. Everybody's circumstances are different, and certainty about your repayments might be something that is of interest to you over the next 5 years, and you might be attracted to a rate like that. Or you might choose to fix part of your loans so that you've got certainty on at least part of your loans. But the message I think the banks are sending, and what they don't really want you to know, is that they believe that variable rates will start to fall over the coming months and years to rates that will be lower than what they're currently offering you in fixed rates. And they want to get you locked in so that they get you locked in at these higher rates. So that's the core message that's coming from the recent movements that the banks are making when it comes to interest rates. So it's a pretty short article where it just talks about this fact. But as I said, the key thing here is still going to be inflation, and whether or not we can continue to see that number falling. And the more and more I talk to different people from different industries, the more I'm learning that there is a little bit of softness in spending in certain industries. And as a result, that will flow on to, or is a reflection of people's spending, and therefore will flow on to the inflation rates. And so, like I said from the outset, and I've repeated a couple of times already, the signal that the banks are sending with these moves that they're making on fixed rates is that they believe the variable rate will be less over the coming months and years, and therefore They're enticing you with these new attractive fixed rates, which might be less than what you're paying today, but will it be less than what you'll be paying over coming months and years? And that's the game we play with the fixed and the variable interest rates. And there's lots of reasons why people would go fixed rates over variable at times. As I said, it comes back to whether or not you want that certainty of your repayments over that time frame, because you might have other things going on in your life and you need that certainty on your repayments. But just be mindful that if the banks are dropping fixed rates, that means they know variable rate changes are coming. So, as I said earlier, I think the power in the relationship between consumers and banks is shifting, and as we start to see interest rates falling, there's more negotiating power moving to the consumer to say, well, if I can't get a good deal out of my bank today, I'll look elsewhere and see what they're prepared to offer me for my business. And you should never be shy of asking the question about whether or not you can get a better deal out of your bank and improve your monthly cash flow when it comes to how much you are paying on your mortgage or mortgages. So hopefully that's helpful. And I want you to really use this information to inform your decision making about what you're going to do with interest rates or your interest rates that you're paying on your loans. But as I said a few times, these are a signal coming both from St. George and CBA. If they're moving fixed rates down, that means they know that variable rates will be falling soon, and they're trying to get people locked into these fixed rates now before the variable rates start to drop even more, and therefore consumers will be paying a lot less. So that's Woody's Weekly Wisdom, episode number 64. Let me know what you thought in the comments, and if you've got any questions or topics that you want me to cover, feel free to let us know what they are. And as I said earlier, if you're watching on YouTube, hit the notification bell to get notified when we send these videos out, and hit the subscribe button so we can grow the channel and get more and more people the information they need to make better or more financially literate decisions when it comes to managing and growing your money and their money. And if you're watching on Facebook or LinkedIn, leave us a comment, hit the like button, and if you really want to do something powerful, hit the share button so that more people can get this information and use it to improve their financial scenario. Have a great week. We'll see you again next week for another Woody's Weekly Wisdom. Cheers.